Welcome back. So, Rudy with Alpha Investments, and today it's been quite a long time since we've really done a story time video, everybody, and it's time I think we revisit a few things. I don't think you guys have heard in the past I talk about the 2008 crash quite a bit, that line in the sand, the infamous 2008, where I firmly believe that is the game changer pre and post for the economy, the culture, the e-commerce, the internet, the social media, the smart. I feel very adamantly that 2008 was the game changer for the modern economy, honestly, everybody. So today I want to have a nice story time with you guys, and I want to explain some of my thoughts. And I want to explain why I feel this is impacting Magic and why I think moving forward, this is going to be a really big thing. I don't think enough people know the history. And I think as time goes on, people forget. So first, let's start with the basic thing, everybody. In 2008, when everything fell apart and the economy came to an end, the average baby boomer from the 60s, 70s, 80s era really got crushed financially. That was when I first got my first real job out of college, and I thought I was hot stuff, making my $45,000 to $50,000 a year starting pay. Now, right when that happened, I was literally, my entry-level position was literally handling phone calls for all existing clients at the firm. I didn't really get a lot of new clients. I was just focusing on managing the current. And what was interesting about that is it was just a time where there was so much panic. All these people were losing their jobs, and they were selling everything they had in their account and converting to cash because they were afraid. That was pretty much what was going on. So now that we've moved past that years later, I look back at everything. And yes, the stock market's back to all-time highs. Magic's doing very well. And, sorry, hang on. And it's one of those things that I just don't think people fully realize that while we had an economic recovery, the economy did not come back the same. The recovery post-2008 was not the same economy before 2008, and it never will be. This is a major economic shift divide, however word you want to use, between the pre and post era of 2008. And this is a very careful thing that everybody must be very careful to not use those feelings, those negativities from the '08 crash to guide your future decision making. And I've been guilty of that many times, everybody. I thought many times to myself, Rudy, I need to wait for the next crash. I'm not buying any real estate till there's another downturn. I'm not buying anything else in the market. Stocks are too high. Bonds, it's just too much. I'm just not doing it. So I've fallen for that myself many times, and it takes a lot of pep talks to yourself. And I look at it now. The biggest issue is most of those baby boomers and a lot of older people, when they lost their jobs from that '08 decline, as the economy started to stabilize in '09 and '10 and move forward, the new economy rose from the ashes. And the new economy, in my opinion, is pretty much the social media revolution era, e-commerce revolution era. And unfortunately, a lot of the older people, those jobs did not come back. Their savings, their investments did not come back because they sold in the panic, because they had to use that money to live on. They really got crushed. So now, even though we experienced that drop in that recovery, the recovery is not the same economy as before. And I'm really driving that point home because, the retailers, everything from these JCPenney's to Sears to GameStops to just these huge conglomerates of retail companies have just been crushed because they're having a hard time adapting to the new era, this new wave, the changing in consumer behaviors, the changing in spending patterns. And now let's jump to Magic, everybody. It's the same exact thing with Magic. When you look at this, think about everything. When you look 10 years ago, the LGS was the backbone of Magic the Gathering, right? Now, even with Hasbro's recent record numbers and Magic growing everything, the LGS is not the backbone anymore. I don't agree with it. I think it sucks, but it is what it is. I actually believe moving forward, what they're doing with this digital marketing with Arena and Netflix and all these new directions they're taking, that is the correct method. I get so many patrons and viewers and commenters and people on this channel that just say, Rudy, I play Magic because I discovered your channel. And I believe that example is extremely common across all YouTube channels and across all pretty much online content that is consumed. I do not believe the backbone of Magic any longer is leaning on the LGS business model. And Hasbro is saying the same thing without saying it, because they are no longer focused on WPN exclusives, the LGS. I mean, they're never going to come out and say it because it's bad for business. I get it. But when you look at what the big dogs and the high-ups in the ivory tower are saying on Hasbro, you can see the money, the marketing, the injection of the direction that they want to market Magic. And it's doing well. Whether we agree with it or not, it's working. Look at the numbers, everybody. So that's where we are. But there's an important thing to remember. This economy moving forward, you cannot use previous trends in previous types of, whoa, every time the yield curve's inverted, Rudy, recession, everything's coming. You have to be very careful. We are in an era, in an economy that has never been back-tested in this style. You know, Rudy, what about the real estate? Real estate's record highs again. You know, the lending, what about another bubble on mortgages and subprime? If any of you out there has ever tried to get a mortgage recently, in the last 36 months, let's say, you will know very quickly, which I have, you will learn very quickly that getting lending and things was nowhere near the way it was pre-08. Period. Pre-2008, I can promise you, I knew people, I worked in restaurants in college, the dishwasher was flipping houses. The guy making the desserts in the back of the kitchen coming in late who was all goofy and probably, you know, I don't know, drugged up or drunk or something. The people working in the restaurant in the kitchen were flipping houses. They had 4 or 5 condos under construction. And they were putting down literally $500 a house or something. And they said, oh, by the time it's done next year, I'll just sell them to somebody else and walk away with 10 grand a house. The mentality and the quality of the loans and the underwriting standards is nowhere near what it is to today's standards. And that is a very important component for everybody to remember. And I don't think a lot of people quite realize the differences, because most people aren't exposed to it on a daily basis. When you work a regular job in your normal life with your family, significant other, and friends, if you have those, you learn, you get very close-minded. You assume that everything within your circle and within your realm of life represents the overall picture. Law of large numbers, right? Well, if everything around me is this way, it's got to be that way everywhere. And it's not true. And we see a lot of fallacies that go in that direction, you know? And yes, the Fed and the government continue to do their printing of money, which is scary, and the debt. There's a lot of negativity, things like that. Those are all a negative thing, period. And eventually, someone's got to pay the piper with the debt, right? Right? That's the theory, right? But the reality is, they can probably kick the can down the road for another 5, 10, 20, 50, 100 years, you know? We don't know. I'm not from the future. We can't predict it. No matter who tells you they can, who they are, nobody can predict the future. And that's something very important that everybody needs to remember. So, remember that, everybody. And I mean, when we look at Magic, the new most common thing I see in Magic now, I'll probably make a separate video to talk about this further, is everybody saying, Rudy, Magic's doing so good with the new products that everybody wants to invest and sell in the products. While that is a new concern, because now the negativity that I ran into at the beginning does not seem to be as negative, does not seem to be as big of a negative kind of, people aren't talking about and attacking me about dumping new product to patrons, it's evil. You don't see that anymore. That was a very hardcore tone that was really heavily influenced on me when I started the YouTube channel 3 years ago. And even that behavior has shifted. So back to the original economy as a whole, while yes, things are not perfect, there's always risk everywhere, at any time. Just like Christmas Eve last year, you can have a market drop like crazy. That is possible. But it's important for everybody to understand that just because the yield curve behaves a certain way, just because real estate's at an all-time high, just because, you know, the short-term, long-term yields and the overall PE, the ratio, the overall earnings and the what they call the multiple of the market, overall the PEs aren't crazily high. You're not paying huge premiums for stocks or equities. There's a lot of ways to look at it, but you can't, I mean, let me give someone else another example. When you look at, a lot of people say, Rudy, look at the Dow Jones, look at the S&P, it's at an all-time high. Okay, but most people don't understand when a company falls apart, they kick you out of the Dow. The Dow 30, which used to be the Dow Jones Industrial Average, is not really the 30 biggest industrial companies. You have all these tech stocks and different tech stocks. I mean, these aren't even industrial conglomerates, technically. Remember, when some of those stocks fall apart, or if they go bankrupt, like Sears or a Kodak type thing, Blockbuster or something, they are removed from the average and replaced. So over time, when you look at the Dow and certain numbers, while the number itself on the surface may be rising or hitting records, it does not always reflect the overall average portfolio or the overall market, like maybe the Russell 2000 or the small cap or a really big index with 1,000, 2,000, 5,000 stocks, It may not fully reflect everything, and it can be very skewing to the perception of reality. Because think about this. Apples and Googles and these, Facebook, these things have experienced so much wealth creation, and pre-08, so much wealth was absorbed out of that vacuum, and then when the money came back and reinflated, it reinflated in a different new area, creating a lot of new wealth for a different segment of human beings. And the other segment, in the old money, the old guard, whatever you want to call it, they never recover. And I don't expect them to ever recover. We are in a different era, everybody. Social media and e-commerce is the future, whether we like it or not. I mean, I do a ton of e-commerce, but I'm still not a huge fan of social media when it comes to like the Facebook, the Instagram, the Twitter, the Tumbly things, the what's it called, Snap Room, all the other. I just don't. I'm not a fan. I know a lot of people love it. A lot of people, it's great for their lives, but it's not for me. But I want everyone to be aware that we're in this new era. And you got to be really careful expecting that, hey, we've had 10 plus years of economic growth. There's got to be a recession anytime. It has to be. We can't go up forever. You can't just compare previous economic cycles, which are usually like 5 to 10 years at a time, to this digital era. And I know everything has trends, and if you look hard enough at anything, you will make your own pattern. But we have to be very careful. And we have to be open-minded, everybody, and we cannot be so negative when it comes to magic and the economy as a whole. I don't care how you feel about magic, the politics, or the direction of certain things, or maybe the artwork. I always bash on the artwork direction. At the end of the day, we cannot, all of us, including myself, I'm guilty of it, we cannot be so negative because there is a lot of new trends and new directions for business moving forward. And I think this is going to continue to create substantial wealth across the United States and the world for people who are willing to go out there, invest, whether it's in stocks, bonds, real estate, magic, collectible, whatever you're going for. I don't know how it's going to unfold, cryptocurrency, but I can tell you for a fact that using previous history or historical trends like '08, like 5 to 10 year cycles before recession is a dangerous thing based on this new landscape. And, I think it can kind of suck for a lot of people because a lot of people have a lot of scars and fresh memories and negative things that happened to them. Just like magic. A lot of local game stores collapsed because of first you had the Dragon's Maze gate crash return to Ravnica. Nothing ever went up in value. Then you had 2016, 2017. All the new product, Iconic Masters, came out. Bombed. Masters 25 came out. Bombed. Amonkhet, Hour of Devastation came out. James Bond. Everything just dropped. Mass box openers lost money, and everything just fell apart. And it weeded out a ton of stores, investors, and everything. And that's a great example. And now here we are 2 years later, and it's a whole new world. Okay?